Welcome to the Bitcoin Crypto Daily News podcast for December 6th, 2025. Today's headlines: Bitcoin tumbles to the $91,000 level, high-profile ETF outflows are shaking investor confidence, and U.S. regulators take a historic step in crypto oversight. Let's break down what this means for you. First up, Bitcoin started the day under heavy pressure, sliding 2% to just above $91,000. The drop came right as Elon Musk's SpaceX shifted another 1,083 Bitcoin, worth $100 million, into new wallets. This ongoing pattern of large transfers, especially to exchanges like Coinbase Prime, has fueled speculation that SpaceX may be shuffling its holdings for custody or preparing for future market moves. Notably, every time SpaceX rotates some coins, it sparks discussion about possible sell-offs or bigger strategic plays. The immediate impact? Bitcoin's trading volume dipped by 18%, and derivatives data from CoinGlass and other platforms signaled a cautious mood as traders braced for options expiry and key U.S. inflation data. The broader market didn't fare much better. BlackRock's flagship iShares Bitcoin Trust ETF, or IBIT, saw another record outflow of $113 million, marking its sixth straight week in the red. This is the longest outflow run since its launch and reflects a larger pullback from institutional investors as the year winds down. That consistent selling pressure directly impacts sentiment. Open interest in Bitcoin futures dropped to $21 billion, and the Crypto Fear and Greed Index remains deep in bearish territory. Altcoins, including Ether, also slid, with Ethereum giving up post-upgrade gains and the CoinDesk Memecoin Index falling almost 6%. However, minor exceptions like Scash and Tron showed resilience, rising nearly 5% and 2%, respectively. The lesson? Institutional outflows can amplify market anxiety and send ripples across crypto assets large and small. On the regulatory front, there's a major development. For the first time, the U.S. Commodity Futures Trading Commission has authorized spot crypto asset contracts to trade on CFTC-registered futures exchanges. This marks a shift toward tighter regulation, promising more transparency and investor protection for the spot markets. The move is widely seen as a step to legitimize crypto trading at the national level and could encourage greater participation from institutions looking for established oversight. However, it also raises questions about how different types of digital assets will be classified and regulated going forward. Quick recap. Today, we saw Bitcoin and altcoins face renewed market pressure fueled by institutional outflows and high-profile wallet moves, while the regulatory landscape in the U.S. edges closer to mainstream financial standards. Like what you hear? Subscribe and follow for daily crypto updates. And be sure to check out our show blog at https://solclogic.ai/2025/12/06/bitcoin-crypto-daily-podcast-12-06-2025 for more insights.